This liquidity trading strategy is going to change your life. And you see, you don't want to miss what I will share with you in 5 minutes into this video. Pay attention. The first thing that we want to identify is our trend. Now, how do we do that? We can use the Comet defining range concept for identifying the trend. And I think I already made a video on that. Meanwhile, this video is strictly about liquidity sweeps and how you can use liquidity for your entries. This is very, very important. The first thing that you have to pay attention to is the break of structure. So after you have identified the market direction, so this vertical line signifies that it's bearish, that I'm currently bearish, and I wouldn't go in details on that in this video today. I just want us to learn exactly how we can begin to navigate the market. So first, we need to identify our break of structure. Once we're able to identify the break of structure, the next thing is, where is our inducement? Now, this is very, very important. Let me show you something real quick. So once we are able to identify that we have our break of structure, what this means is this: after the break of structure, we are expecting that price continue to the downside, because break of structure is actually telling us more stories about the chart. So we're expecting that price continues to the downside. However, in order for price to continue to the downside just like this, in order for price to continue like this, there has to be first a sweep of liquidity. And how do we know that? This high, look at this, we have our swing points here. We have a zone. This is one, this is another one, this is another one, right? And we have another zone here, and this is the one that is currently forming. So basically, we are expecting that price will break this high. All right, that is the sweep of liquidity. So if price comes and begins to do something like this, of course, you know that this is exactly how price move. Now, once we see that sweep, we can start looking for our selling continuation, and this is where we want to get involved in. So there are different methods of entering here, which I'm going to share with you in this video. Pay attention. So once we have been able to identify that, the next thing you can see, we are also expecting another break of structure. Once we find that, if we see something like this, for instance, we see something like this, this is just internal retracement structure. So we need to work with the external. So when we see something like this, then this is when we can now wait for our inducement, then continue the sell. Now pay attention. I know this can be a little bit confusing, especially these internal structures, but I will show you exactly how to trade it and how to navigate the chart. So after we have identified our break of structure right here, the next thing is what? The next thing ought to be what? Ought to be our inducement. And where's our inducement? This is our inducement. Okay, but what happened? Immediately price started creating higher highs, higher lows, higher highs, higher lows, higher highs, and broke this low, meaning a new high have been created, and this high was created inside of this structure after the break. Right? I just hope you are getting it. In case you are, let me know in the comment. Okay, make sure that you watch the video to the very end, because I'm still going to show you a lot of things on the chart. So after we have identified another break, this is another break, right? So what is happening here now is this. So the structure have moved. So let's do this. Let's do this. Break. The structure have moved from this high, which is the inducement now. I've moved from this high to this high. So we can call this a simple transfer. All right, transfer of inducement. Okay, so we can call this a transfer of inducement. Right? So once you are able to understand some of these things, then we are good to go. Now let me show you in the chart exactly how you can implement this without any struggle. Now, exactly what I explained, that is what we are seeing right here. After the break of structure, we now wait for what? Our inducement. And where is our inducement? This becomes our inducement. This becomes our inducement. And after the inducement, we want to take our trades from a valid supply zone. Okay, a valid supply zone, which in this case is this, or a order block, as the case may be. All right, now there are some variations which I will share with us subsequently about the zones we are going to be marking. Okay, now when this happened, we can see that you could have entered directly or simply wait for a further confirmation. Of course, this is the 5-minute time frame, and this works on every time frame. But just make sure that your trend, your bias is very, very okay. All right. Now, this is one thing that you also have to pay attention to. Okay. So after we have this is the zone where we want to look for our entry opportunities. And what happened? We have this as a sweep. Okay, a sweep of liquidity. So that's a sweep of liquidity right there. So immediately the sweep happened, what are we anticipating? We want price to break this low. Actually, want price to break the candle that swept liquidity. Then we can enter from either from the next candle. This is the open of the candle. We can enter here, or you can simply wait and you can target your 1, 2, 3 risk to reward ratio. Now, or you can decide to wait for price to come back to this zone. But take note, if you must wait for price to come back to this zone, then make sure that your trend is still bearish. Okay. Now, after the break of structure, what are we waiting for? We are also anticipating what? Another inducement. And where can we find that? We can find that inducement right here. So this is our inducement. How is it an inducement? We have this little break which is in the form of wicks, and because we're only looking for sales, right, because of our daily bias or our sessional bias, as the case may be. So immediately that is taken, for instance, immediately this is taken, we can start looking for sales. So it's the same principle, the same thing. Then how can you start looking for sales? You simply need to wait for what? The sweep of liquidity. In this case, where is our sweep? Look at it. Look at the sweep right there. Look at it. So there was a sweep. Yes, there was a sweep. This was the candle sweep. Okay. So immediately that happened, what exactly can we say again? We can see that this candle broke this candle. So this is the confirmation for the sales. So you can literally enter from the opening of the candle, which is here. Can enter here, right? Let me show you. You can choose to enter there, and this is why, after learning this, watch the video over and over again and try to backtest this, and you will see. Remember, this was the candle that swept liquidity, of course, so that becomes your stop loss, because once that is invalidated, we are not interested. Okay, so you can choose to target 1 to 2, 1 to 3 risk to reward ratio, and in this case, look at that 1, 2, 3 risk to reward ratio. Now, this is one aspect of the entry. Another aspect of the entry is for us to simply wait for price to retrace back. Of course, this was the entry. Immediately we saw the confirmation, and the second one would be here. This is the candle, right? So we can actually enter from here. So this was the candle that also triggered it, that also executed the trade. So the same stop loss, and this is exactly what we see. Okay, so can still target 1 to what? 1, 2, 3 risk to reward ratio, and you can see it right there. So if you have done a lot of your back test, you can see that you can decide the amount of risk to reward ratio you want to be working with. Okay, so that's one aspect. And the second aspect, immediately price broke the market structure. Look at that. Immediately price broke structure. What happened? We are waiting for what? Inducement. And this is just a single leg move. And this was the internal market structure retracement. Okay, So there was nothing significant in that zone. And now we have what? A break of structure right here. So after the break of structure, what are we waiting for? We're waiting for inducement. And where's our inducement? This is our inducement. Okay, this becomes our inducement. However, when price pushed down, okay, what happened? We saw another break here. So automatically this inducement has been shifted from this high into this high. So we have a transfer of what? Of inducement. And in this case, what are we waiting for? We are waiting for two things. First, after the inducement, where is our zone? This, of course, is still a valid zone. This is our zone because all of these zones have been mitigated. And in this case, we had a sweep, and immediately the sweep, what are we waiting for? We are waiting for what? A break of the candle which swept liquidity. So it's simple, guys. So we have this, and we can enter off from immediately the sweep, which is this. This was where price actually opened from. You can choose to enter from there. In this case, you would have gotten just 1 to 1.8 risk to reward ratio. Of course, I wouldn't want to take this trade. I will always wait for an entry opportunity that could give me potential 1 to 3 risk to reward ratio. So in this case, after this break, another place you can enter is here, right? The candle. And you can also enter based on the 30% of the candle as well. So we have this, and look at that. So this becomes our entry, in this case 1 to 2, and you can decide to manage your trade by breaking even. Okay, so immediately this is happening, we now have what? Another. Remember, we also have immediately, because this inducement confirms this low. So we have a break of structure right here, and we have what? Our inducement right here. So this becomes our inducement because this is a single leg, and this is just internal structures. This is just internal structures. So we are not taking this as inducement. So the inducement have been taken out here. So where do we look for our entries? All of this, like I said the other time, have been what? Mitigated. So there is no valid zones where we are going to look for sales. So we simply wait for a tap. And remember, this zone was valid from our previous market structure, which was a break of structure. We're waiting for inducement. And of course, if you are taking, we took this trade, and this was another zone where we could potentially enter. So immediately that happens, this is what? This is another entry opportunity. Now, the good part is this. If you notice, all of these entries are in a single day. So in one day, because you are able to get the trend direction right, you have gotten how many trades so far? We have gotten one. So I'll count this as 1 and 2 and 3, and this is the 4th one. All right. So imagine that you took the 4 trades, and let's say you got 3 correctly. That's about 1 to 9 risk to reward ratio, right? Or let's say that's about 3 to 9 risk to reward ratio, right? So this is very, very important. Like 1, 2, 3, and 4 entry opportunities so far. Okay, and this for me is the end of my trading session for the day. Okay, so basically with this liquidity trading strategy, you can do a lot. All you need to do is to understand the dynamism in the strategy, and you are good to go. In case you want to learn my daily bias strategy, I recommend that you watch this video right now.